Good morning, YouTube. Today we're going to talk a little bit about wealth planning and briefly touch on a Jackie O trust and what that is, and some of the moves that really wealthy people do to avoid death taxes and some tax planning that they do to preserve their wealth over time. So let's get right into this. First, I want to show you what most people see regarding taxes, and they say, hey, this is just the way it is, and I don't like it. Federal, anything over 12 million that you have is taxed at probably 40 something percent as you die, and the government gets it as opposed to your heirs. You come down here and it shows Washington state tax is 2.193 million, and so what you'll see is these are just the way it is, and people will just say, oh, okay, well, I'll just pay that tax. Well, there's some mild things you can do to avoid these taxes, and then there's some large things people do that have a lot of money. So one small thing you can do is to maximize the amount that you can pass the next generation when you die, is you basically have your wife and your husband separately have assets, and those assets pass the next generation, because then there's an exclusion for each of you. That's something that probably some people do that maybe are in the 15 million range. So let's talk about what Jackie O did. Some of these articles are confusing, but essentially Jackie O had tons and tons of money, and if she just would have died, that money would have went like 50% to the government, and she didn't want it to go to the government because you know how well the government uses money. And so she created what's called a CLAT, is what it says here, C-L-A-T, and it's a type of trust. And this type of trust, basically, if you put $1 million in, there's a certain amount the trust have to give to charity for each year for 24 years, and then the balance that's left goes to the heirs of the trust. So it's a way to take a large fortune, benefit charitable organizations, and then also pass some to heirs after that 25 years. The amount that is given every year changes based on 75-20 rate. I'll show you what that is. That's a rate the government sets every month, and so this is what it is now. So you picture a situation where you have an investment earning, let's say 8% or 10%, and you're given away 3, so you're going to accumulate 5 a year, which maybe could even beat inflation. The trust pays independent taxes and has heirs. There's some other things you can do, but on the surface, what you want to understand is that this trust, Jackie O trust, exists, that it can be used for some tax planning when you get into certain wealth categories. This talks about 100 million and how much she was actually taxed on after she created the time period, how much it's giving per year, and what the results look like over 24 years. Now, today, the Waltons have a lot of wealth. Their wealth initially was 20% by each family member, but over time they've created a Walton Enterprises, a Walton Trust, and they have moves into these charitable organizations and other enterprises to preserve their wealth, maintain control. They're trying to maintain control of 50% of Walmart stock, which isn't a bad thing for you and I. It just means that half of the stock generally will not be sold and will create stability in the stock value. 415 million shares, it says that they sold. In actuality, they probably did not sell those, because then they would have had tax consequences. They probably gifted the stock and transferred it to Walton Enterprises, and then sold it in some kind of entity where there's a tax advantage for that. Walton Enterprises has $169 billion in assets today, which obviously means a large portion of their wealth is in Walton Enterprises. How is that controlled? How is that done? How many of the family members are involved in that organization and how they manage that. Down here, this talks about a sale, trying to keep ownership at 50%, how Walmart is doing stock buybacks to pass wealth to the shareholders, and And then, back to the inheritance tax. If you're not going to have wealth in your life, it doesn't matter a whole lot. But if you end up in a situation where your business grows a certain time, or you have a farm and the farm value grows, then you need to look at this plan and at least know it exists. If you can save, let's say, on let's say you save $5 million by doing this type of planning, that's a lot of money that can be used in better ways than the government can use the money. And I wanted to take a few minutes just to make sure you know today about the Jackie O Trust, that it exists, that you can use those type things for tax planning, and also that even today, the Waltons use these things to preserve their wealth, maintain control, and it's not a bad thing. You see them give a lot of money to charities and things, and that comes out of a lot of those trusts and that tax planning things that they have. And they're a very generous family from that standpoint. And so I just wanted to introduce you to that today. Now for me, I think about as my houses and things like that go up in value. What does this plan look like? When do I have to put the plan in place? Maybe I should already have some things happening now. How do I create generational wealth for my children? And so I'm probably going to make a couple more videos about that. I think there are certain things that really benefit me and my wife, and then other things that can benefit my children. And so I wanted to make this video just so you understood these things exist. Hope you have a great day, and I'll talk to you later.